Hello and welcome back to this channel. Candlestick Trading Patterns, Candlestick Psychology Part 2. Candlestick Psychology demonstrates the behavior of the trading market, the war between the bulls and the bears, the sellers and buyers trading action. From candlestick pattern and price history that they left behind, we can forecast the behavior and direction of the trend with a big probability. In order to be fully familiar with candlestick psychology, we must increase our knowledge about technical analysis, such as price action, indicators, horizontal and dynamic trend line, and candlestick math. Fundamental knowledge is also an influential factor in candlestick psychology. The traders should know the company that they are investing their money in. For example, how the CEO, chief executive officers, manage and run the company. What are their salary? Maybe each one they take big salaries, but there is no action in that company at all. What is the revenue and profit, cash flow, innovation, and so on in that company? All these aspects are influential factor in candlestick psychology, so we are going to talk about it later on in our future series. So please subscribe to this channel, so this way you do not miss any trading information. In this video, I'm going to compare the strong big body candles versus short bodies, long wicks versus short wicks, bullish versus bearish candlestick, and discuss the psychological aspect on the price trend. This will acquire your knowledge, your trading knowledge, about whenever you look at any price trend, you will have a good idea what may happen next. This is a part of candlestick psychology. In this graph, we see four big bullish candles. They're very strong, and we see it usually in our price trend. Long bullish candles, indicated with the green color, has a strong body, big uptrend momentum. When you see these candles, you should know that the trend is going up very strongly. A strong bullish candles like Marabozo, like this one, shows buyers in the market has a strong power and exerting a strong buying pressure in the market. So this is a very strong, it means that only buyers there in the market and there's no sellers. There is a huge distance between open and close. This is the open and this is the close. That's a huge distance. This shows the stock price traded strongly in only one direction, upward, and is going up aggressively throughout the day, and the bulls totally control the market. Typically, a full Marabozo has no upper or lower shadow. That means that here, that open and low are at the same place, and here the close and high are at the same place. And the market closes at its highest price of the day. The market closes here, and the prices, since the high and close are at the same place, so it means that the highest of the day the market closes. Here we have other type of Marabozo, like this one is closed type Marabozo. Here in closed type Marabozo, still that's a long candles, big body, big momentum, and open and low are at the same place, but on the closed side we have a small upper shadow. It means the price went up all the way here, but there are some sellers in the market that pushed the price down and left a small retracement, upper shadow. This one is the open type Marabozo. Now, the open type Marabozo, the strengths are almost the same, whereas here you see the presence of sellers in the market that push the price a little bit down. It opens here, and the sellers push the price down up to here, but we had a strong buyers in the market push the price up past the open price and left a retracement, lower shadow, and it went up all the way here and closes here. So here in open type Marabozo, the close and high are at the same place, but in open price we have a lower shadow. This is another normal big body candles that you see it in the price trend, and we have a upper and lower shadow, and still that is a sign of bullishness, and the next day the price will open a little bit higher than this one. So these are all a strong bullish body candles. In this graph we have 4 long big body, a strong momentum bearish candle, long bearish candlestick indicated with the red color, has a strong body, big downtrend momentum. A strong bearish candle like Marabozo, like this one, this is Marabozo, shows sellers in the market, has a strong power and exerting a strong selling pressure in the market. There is a huge distance between the open and close price of this candle. Huge distance. This shows the stock price traded strongly in one direction, downtrend, and is going down aggressively throughout the day. And the sellers totally control the market, completely control the market. Typically, full Marabozo like this has no upper or lower shadow, and the market closes at its lowest level here in this place. The low and the close price are at the same place, and here the open and high price are at the same place. So we are some other type of bearish Marabozo, like this one is they call open bearish type Marabozo. The price open here, and because of a little bit buyers in the market push the price up till here, and then the sellers, the bearish power is strong and push the price down past the open price, and it come all the way and closes right here. So that is again a big bullish power, but a bit weaker than full Marabozo. Now this is closed type bearish Marabozo, and then the price again open here, and it come all the way here, all the way till there, but they have some buyers in the market, bullish, push the price up a little bit and closes here. So again, that's the strong bearish candlestick that the next day there's a big probability that the market close even lower than this one. This is again a strong bearish power, bearish candle, with open with the upper and lower shadow. This is weaker than this one, and also than the big Marabozo, but it's still strong. So these are the four strong bearish candle that you see the psychology behind it. In this graph, you see a series of small body bullish candle and small body bearish candlestick. Now, shorter bullish or bearish candlestick indicates little price movement. The price doesn't move that much and represent consolidation. So the price basically consolidate rather than moving in one direction up or down. Shorter candlestick like this one, or like this one, exert weak buying or selling pressure in the market. The shorter the candles, like this one, very short, and you see that there's a shorter body, slow by slow is getting bigger. The shorter the candles, the shorter the distance between open and closes. Like this is the open and that's close. You see how short is that? And it becomes shorter. Here, basically the open and close are at the same place. Like these are bullish, but this is the open and this is the close price. Look at that. When it becomes shorter, the open and close is very close. So there is no price movement. This indicates that the price doesn't increase or decrease. With the green increase or the red one decrease. The price doesn't increase or decrease drastically or significantly from the open, and the buyers and sellers were not aggressive at all. The buyers and sellers would not aggressive to push the price higher or lower. Basically, with bullish and bearish small candles side by side, sitting side by side, the market is calm and moves sideways or consolidation. Sideways, it means to look like in one straight line, or consolidation, just a bit going up and down, up and down, up and down, but it doesn't go up drastically or something like that. So the volatility is very low because the market is quiet. The volatility, it's at its lowest level, and the price doesn't move, and the market is very quiet. So this is the characteristics of very small body candle versus a long body candle. So in a long body candle, we demonstrate what is exactly a long body, big momentum, going up or down in one directions, and so on. So these are the characteristics of the small body and the psychology of small body candles in price trend. I have so many valuable trading informations to pass on to you, so please subscribe to this channel, and thank you in advance. Candlestick psychology continues. In this slide, I'm going to show you long wicks versus short wicks. The upper and lower shadows of the candle provide valuable information to traders. Upper shadow represents the highest price during the time frame of the candle, and lower shadow represents the lower price the candle had during that time frame. Candlestick with shorter upper and lower shadow shows that most of the trading action occur near the open and close price of the candle. Longer upper shadow means the price went a lot higher than the open price. But before the market closes, it was rejected by the sellers in the market, and they pushed the price down and left the upper shadow. Longer lower shadow means the price went a lot lower than the open price, but before the market closed, it was rejected by the buyers in the market, and they pushed the price up and left the lower shadow. Candlestick psychology continues. Long wicks versus short wicks. Now, candlestick with longer upper shadow, like this one, upper shadow, longer upper shadow, and shorter lower shadow, like this, bullish and bearish, indicates that buyers were dominant. Buyers pushed the price up. They were dominant during the time frame of the candles and constantly pushing the price higher. But at the end, sellers overcome the buyer's power and push the price lower, and resulted and closes here and resulted in a long upper shadow. Same thing as here. So the sellers push the price down all the way here past the open price and closes here, and resulted a long upper shadow. Candlestick with long lower shadow, like this and like this, bullish and bearish, indicates that the sellers were dominant during the time frame of the candle. It means sellers pushed the price down all the way and constantly pushing the price lower, like this one, constantly lower. And when we reach this area, then the buyers again overcome. At the end, buyers overcome the seller's power and push the price higher, 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 and close here. And in this case, it pushed the price higher, 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 and closes here, and resulted a longer lower shadow, like this and like this. These two, bullish and bearish spinning top candlestick with longer upper and lower shadow, upper and lower shadow, and a small real body. You see the body is very, very small. If the candlestick only has one long shadow, let's say for example only one long upper shadow, or only one long lower shadow, that was the sign of reversal that we talked about it before. The long shadow of a spinning top suggests the bull and bear were active, very active. These long upper and lower shadow means the bulls and bears, they were very active during the session, although the trend didn't have considerable price movement, because the open and closed price is very tiny, very small. The open and closed price are very small, so the price didn't move that much. But it went during the session, the price went all the way up and come back, all the way down and come back. In this situation, the volatility is high. So as soon as you see this kind of candle in a price trend, you know that the volatility is high. The fight between the bulls and bears were a standoff. Nobody win. Buyers and sellers were equal in power and could not gain anything because the upper and lower shadows are the same. If you see this kind of candlestick after a strong, let's say, Marabozo that is going up, a bullish Marabozo, if you see this kind of candle, that means that the power of bullish reached to the end. So you are near the reversal in uptrend and near the reversal in downtrend. If you see this one after in a downtrend after a Marabozo, for example, a big bullish Marabozo, if you see this candle, that means that the power of Marabozo is finished and you are close to a reversal. This is also true if you see this candle after a strong downtrend or uptrend. It suggests a strength of the trend reaches its lowest or its highest or its lowest level and near reversal. So again, this is a very good explanation of long wicks versus short wicks, and that is the psychology of the candlestick. Candlestick psychology continues. Bullish candles versus bearish candles. From the candlestick psychology point of view concerning the body and upper and lower shadow, we can conclude the following results. Number one, long green bullish candle with shorter wicks, shorter upper and lower shadow, demonstrate the bulls control the market for the duration of the time frame of the candle. And if there is no shadows like this one, no upper or lower shadows, that means it's a huge, big body Marabozo bullish candle. And here we can say the bulls totally control the market. It means there is no sellers in the market. The trend goes only in one direction, upward. Number two, long red bearish candle with a shorter upper and lower shadow. This demonstrates that the bears control the market for the duration of time frame of the candle. And if there is no shadows, like here, there's no upper or lower shadow, then we have a strong bearish Marabozo. And this way, we can say the bears totally control the market. There is no buyers. The trend only goes in one direction, downtrend. Number three, small bullish and bearish candles with a small upper and lower shadow, upper and lower shadow. It means neither the bulls nor the bears can move the price considerably because between open and close is very small distance. And the price closes about where it started. It means that between open and close price, there's not that much difference. Between open and close, there's not that much difference. Number four, bullish and bearish candles with long lower shadow. Long lower shadow and a small upper shadow. Very small upper shadow. Shows that the bears had a strong power. The bears had a strong power at the beginning. Push the price down. Push the price down. In this one, the bears pushed the price down all the way here. But at the end, But at the end, the bull controlled the market. The bulls control the market and push it higher and higher, and closes here. And this one, in this case, the bull pushed the price higher and higher and higher, and finally passed the open price and close it right here. This is a sign of reversal. So if you see, like for example, this at the bottom of a downtrend, that means reversal will happen. Number 5, bullish and bearish candle with long upper shadow, long upper shadow, long upper shadow, and a small lower shadow, very small lower shadow. That indicates that the bull had a strong power at the beginning, so push the price up. The bulls push the price up, the buyers push the price up, but at the end the sellers push the price back and closes about the open price. This is the open price here. It just closes here just about the open price. In this case, the sellers push the price down all the way, and it closes right here about the open price, because the distance between open and close are very tiny. This is also a sign of a reversal. That is, if you see these two, any of these two, regardless of the color, at the top of an upward trend, that suggests a trend reversal. So the trend will change from upward to downward directions. And finally, number 6. Number 6 is bullish and bearish with a long upper and lower shadow. Long upper and lower shadow indicate that the bull and bears tried their best. The bull and bear tried their best to push the price up and down during the time frame of this candle. So they were very active. But at the end of the day, the price closes about where they opened in the morning. The price closes where they opened during the time frame of the candle. It considered as great amount of indecision. So these are, and if you see these two candles in a price trend, that indicates indecision, because the body is very small, but the upper and lower shadow is long. So that is indicating indecision. For example, if you see these two candles at the top of, let's say, an upward trend, above a long bullish candle, that indicates that the bullish power is almost come to the end and we are close to reversal. So this is the candlestick psychology, bullish versus bearish candles, and we have learned so much in this video about the psychology of the candles. It is so important that the traders know about it before we advance to the next topic. That's all, folks. If you like this video, thumbs up, subscribe to my channel, leave your comments. Thanks for watching. Take care and see you next time.